Hey, welcome back. This is OZ from OzFx, and today I just have a trade breakdown that I want to give to you guys. And the reason that I do these is not to show off, not to brag, not to boast. It's because I feel like the best learning comes from actual application of these concepts, because you could go through the Smart Money Bootcamp, or you could go and watch a bunch of videos, including these, right? Even these trade breakdowns, this applies to this as well. You don't learn without experience and application of the concepts that you're learning and taking notes on and trying to learn more about, I guess you could say. So what I wanted to do was I wanted to go over the trade that I took on Nasdaq100 today, because it actually has the ICT 2022 model inside of it. And if none of you guys know what I'm talking about by that, go follow ICT on YouTube. I'm not one of those traders that's going to pick up a strategy from somebody and not give them credit. Okay, so just go check out ICT, check out his 2022 mentorship, watch the whole thing, and it focuses on the model that I'm going to show you today, and it's mostly applicable to the stock indexes. All right, but let's get into it. So we got NAS here, and this is on the 1 hour. Let's actually go out to the daily just to show. So we've come up here and we hit this high here and we started to reject. We haven't shown any signs of wanting to pull through it as of right now. I'm not saying that we're not going to. We very well could. I'm not sure yet. We could also come back down here before going back up. There's a ton of liquidity chilling down here, so we will see. So if we're here on the 1 hour, I want to break down what we got. Okay, let me just go full screen for you guys. All right, so if we're here on the 1 hour, what we got here is, this is your high, the most recent high, and this is your low. So this is the most recent trading range, because this high made a new low down here. This was your high until this broke this low right here. That's in my opinion. That's the way I'm looking at it. So this is my trading range, and we have a bunch of liquidity chilling right here. Okay, so, and then we came up and we actually made a failure swing right here. So what is a failure swing? A failure swing is pretty much just like what this is right here. We made a high, we did not break through that high, we made a low, and then we made another failure swing. So that gives me reason to believe that we were going down today. I initially wanted to take out this liquidity right here, but we never got there. It is what it is. I didn't even catch the entire move of the day, but it is what it is. All right, so let's go down and break this down a little bit. All right, so let's first start at the 15-minute time frame. Okay, and if we look on the 15-minute time frame, we immediately look over here and we see this big long range right here. And what do we usually think is going to happen when we have a big long range like this, especially when you have an imbalance inside of it? Well, we normally expect that to get filled in, okay? And now looking at it and pulling that imbalance over, look how price respects that imbalance. Yes, it goes through it a little bit, but for the most part it respects it, and it's playing around in there, filling it in. So this could be enough for price to push back up, but that's not what we're here to talk about either. All right, so let's go down to the 5-minute. And here's where things start to get a little bit more interesting. This is where you can start to frame out things a little bit better. And so this first line right here, this is 8:30 a.m. New York time, and this is this is supposed to be 9:30 a.m. New York time. And these are just two times that I like to outline. Initially, we want to look for the setup that I found around 8:30, and if it doesn't show up around 8:30, then you wait for 9:30 for the equity open, which is what happened today. Okay, and you can probably already start to see some of the things that transpired here, but to actually break it down better, I am going to show you it on the 1 minute. So let's go down to the 1 minute chart. All right, and now here we are in the 1 minute, and I advise you that if you're looking at this chart right here, to pause the video and tell me what you see here. Where do you think I got in the trade? And then unpause the video. All right, did you do that? Okay, so all right, so now that all the drawings are back here, you can see this is 8:30 right here, and if you see, nothing really happened at 8:30, but we were inside of a downward, I guess you could say, consolidation right here, and then here is 9:30. Okay, and still consolidation right here, building up liquidity, and then what happens right after 9:30, we take the bottom of this consolidation here, and then we come back up and we take the top of the consolidation, and what do? We come into this previous imbalance that I was watching beforehand. And now this could have been the trade that you got in right here, and it would have been, let's just see what this would have been. Let's see, if you would have had it right there, put this right above the high, you could have ran to there, would have been a 6-to-1. There would have been a 10-to-1. So you could have had a pretty good run right there, but I didn't get that. I didn't see enough. I didn't know if this was going to just continue going through. But this could have very well worked out as a trade as well, but that's not what happened. So after we tapped into this imbalance, we came down and we broke through all of these lows right here, taking out all of this liquidity right here. Okay? And then what happened is we created a little consolidation here, broke back up into this imbalance that was left behind, and this imbalance is what broke this structure right here. So we have very good confidence when it comes to taking a trade there. And I literally just had my limit setting here. As soon as I seen this break, this area over here, I set a limit. And I put my stop loss above, the bodies of these candles over here, just because I didn't want even worse risk to reward than it already was, because I had a pretty big stop loss on this. And then as you can see, we came into the imbalance and we just rejected and fell right away, securing a 1 to 4.5 on this trade. The way that this trade actually panned out was I had my take profit somewhere down here. I don't even remember where I had it, but it was down here a little bit farther. And when we got here and started consolidating right here, I set a stop loss right there, and then it stopped me out in profit. So I secured my profit, and after this trade, I was done for the day. Okay, so let's just go over, now that I showed you the trade, how this is the ICT 22 model. And now it's a little off in terms of time, because he teaches at the 8:30, but then if it doesn't happen at the 8:30, it can happen at the 9:30, which is what happened. Okay, so typically what you want is you want to mark out 8:30 on your chart. So we draw the line at 8:30, and then we wait for some high or low to be taken out. Okay, that didn't happen at 8:30. What happened? We drew a line at 9:30, and what you would do in this case is you would wait for a high or a low to be taken out. So we have this low right here, and we have that high right there, and it takes this high and it takes this low. It actually takes them both, so we're good. And then after a high is taken, you want to see displacement the other way, but you need to have this first run on liquidity. If this first run on liquidity isn't here, then this displacement isn't as big of a deal. I'm not saying that you can't trade it, but I'm saying it's not the model that I'm talking about right now. So we take the first side of liquidity, we make displacement to the downside, showing serious movement, serious momentum to take out that low, and then we want to see an imbalance left behind. You don't even care about the order block, you just look for imbalance. But if there's an imbalance, there's most likely an order block, okay? That's literally all you need. You need to mark 9:30, wait for a high or a low to be taken out, like the most recent high or low before 8:30 or 9:30, depending on which time you're using. And then you look for an imbalance, you wait for a return into that imbalance like we have right here, and then that's your trade. That's literally it. Alright guys, so that's pretty much it for this one. I will show you the MT4 breakdown really quick. Alright, I meant to say MetaTrader 5, not MetaTrader 4. And as you can see here, this is the same area that I was just showing you. We got these highs and lows right here. Sweep, sweep, back down here below. And then here was my order right here. And as you can see, I got stopped out on the way back up. And yeah, so there you have it, guys. I hope you learned something. Leave a comment down below. Don't forget to smash that like button. Later, guys.